Crypto Hotep here with another investing video. We're in week 84 of the Family Portfolio and Dividends Tracker. Thank you guys for watching and tuning in again. Really appreciate it. Thank you guys for the views on all the videos. Thank you for sharing the videos as well. It really helps me out a lot and supports the channel. Before we jump in here, as always, guys, I want to say that these videos we're gonna cover obviously our portfolio, and then we're going to cover some market news. But first and foremost, these videos are for me and my own family's edification. If you find them helpful, great, fantastic. Please, support the channel and such. But, with me, these videos are to document the family investing journey and also to show that you can generate wealth over time if you have a broader time frame and time horizon, and with little small increments and deposits. But by no means is this financial advice. Please do your own due diligence when it comes to investing into crypto, stocks, and those type of things. Before we go to before we cover week 83 here, and before we go to week 84, we're going to just discuss some market news. It was fairly quiet this past week. The only thing that happened was really Nvidia's earnings. That was the big thing. That was on Wednesday, and they blew out the earnings per usual again. But this tweet by the Kobesi letter, which if you follow me, you know that Kobesi is an account that I do like a lot because it provides quick information and opinions, and it's just a good account. It kind of sums up this past week market price and market price action. And it says, why are markets crashing? Our logical explanation: there's quite literally only one headline that could be partially blamed for such a sudden market crash. This was on November 20th. At 11:20 a.m., the U.S. Department of Labor said November and October employment situation will be released on December 16th. And by this point, the S&P 500 was already down a negative 70 points from its high. However, in the 40 minutes after this announcement, the S&P 500 crashed another negative 120 points. So again, this just kind of shows if you have a strong stomach, you'll do fine in the stock market, because over time, stocks of good quality companies tend to go up and to the right forever. Okay. And this is what I mean. So on November 20th, market was down. November 21st, complete opposite direction. No headlines, no new information yet. The S&P 500 surges plus 100 points in 50 minutes. That's over 800 billion in market cap. But why? Because everybody's moving in the opposite direction now. The AI is a bubble crowd. Briefly just switch back to maybe AI is the next big thing. And this will switch back and forth many more times. So again, very cyclical, guys. Very cyclical here. So, and one other thing I do want to show the S&P 500 to correlate with this tweet. So this is the S&P 500 trading chart or investing chart on TradingView. Okay, so it's a weekly time frame. If you want more videos with charts, I actually have a trading playlist of all my charting. Feel free to look at that. But with this, if you look from April's low, okay, so April's low is when the market dumped because that was a whole implementation of Trump's tariffs. Market didn't like that at all. However, and ironically, quote unquote, the market regained itself and pushed higher. And it pushed higher from April all the way until, I would say, late October, early November here, and we finally see two red candles. And that's it. And what's funny is we don't even see a dump further. It's just these two red candles here, and they're sitting. Price currently is sitting in the weekly level. It's just sitting there. That's all. So as of right now, all this is a break and a retest. This is a very bullish sentiment, but we will see. Next week is going to be very interesting. Next week will be very, very interesting to see what's going to happen. Okay, so let's go in. But before we go to week 84, as always, we go to week 83. Week 83 saw with a portfolio of $3,460.77, money weighted rate of return of 14.61%, market gain of $320.10, with dividends earned of $28.75. So what happened this week? So this week, week 84 sees us with a balance of $3,582.40. So we're back above that 3,500 mark, right? The money weighted rate of return year to date is 13.44%. Market gain of $294.35. Dividends earned of $29.15. So what actually happened between this week and last week? And all that really happened was we were blessed to receive a deposit. So one thing, and I forgot to mention this, one thing that we did do, in terms of deposits, normally our deposits are every other week and they're only about $15 or so. Because again, we're trying to show that you can build your portfolio up over time with very small incremental deposits. So that was $15 in October, October 23rd. What we did was we increased that by $5 for this time period going forward. And that's what I think needs to be, you need to know that. So you, when you start investing, you can start with very little amounts of money, maybe $20, maybe $50 a month, something like that. At some point, if you generate more income for yourself, you need to apply that to your investing process as well, your investing strategy, and also increase those deposits. So whether it be $5, $10, any incremental increase is very helpful. So that's why we basically increased the deposit from 15 to 20. So now that's what we're doing. We were also blessed to receive another payment, um, and some more income, and we applied that to the portfolio, and that was in the amount of $125. So we did do some shopping. So total, we bought stocks that totaled the amount of $147.38, and we bought a lot. We bought Sony for the kids, Cintas, Waste Management, Microsoft for a lot of us, Starbucks, Visa, Target, McDonald's, Moody's, Amazon, Costco, Apple, Tesla, and Lowe's. Wow, we we went shopping. So let's see how the portfolio did here. Okay, bottom to top. Our middle is at the bottom, and our middle has a balance of $464.66. Money weighted rate of return, we dipped down at 5.81%. Okay, steady. I will say this: even though our middle stocks are only above 5.81% or so, this is a good chart, good year-to-date chart. Not really worried about this at all. Market gain is $12.54. Dividends earned is $4.12. Target, again, the Achilles heel. Costco, surprisingly, we are down Costco year-to-date over 5%. Very interesting here. Amazon up almost 2%. Google up over 110% on Google. Yeah, that's not a typo. Starbucks down over 5%. Sony, we bought more Sony, and we are up over 26%. I will say this: Sony, if you've been following the channel, you'll know that we got Sony for our middle and our youngest, because that's what they asked for, because Nintendo has stopped trading on M1 Finance because they trade on the Hong Kong stock market. So we weren't able to do that with M1 Finance. So we had to supplement that. And the reason we supplemented that for Sony, for the kids, was Sony PlayStation, right? They have the PlayStation. So we figured that correlation would be good for them. Sony's actually a good company, and it's been one of the best positions in anybody's portfolio. So year to date, up over 26%. Tesla up over 15% and still climbing. So again, our middle stocks is like slow and steady. I will say slow and steady. My wife's stocks. Let's go to the next, at the cusp of 500. So we have gone down, right? The market goes down, our portfolio goes down as well, but it doesn't go down as much. Um, so with my wife's stocks, the balance sits at $499.39. Money weighted rate of return year to date of 39.75%. That's still a very good return. Market gain of $92.58. Dividends earned of $2.43. So Google, very similar to our middle, is up over 103% here. That's tremendous. That's year to date. Pepsi up over 6%, Tesla up over 24%. We're almost at 25% with Tesla. Let's go. Celsius is down even though you see it in the green. So Celsius normally with my wife's portfolio was up in the 60s, close to 70% year to date. It has peaked in price. The stock has peaked in price and it is very low right now. I believe it's around 40. No, it even got lower. It's around $38 right here. So let's just go in here real quick so we can see from a weekly chart here, it went from 40 down to 38. So it's dropped. It's dropped over 8%. Okay. Um, that's all well and good. Nothing has changed with our viewpoint on Celsius. And then remember, we did add Microsoft, so that was a piece that my wife wanted to add. And this is a very good selection of stocks. This is 5 stocks, not too many. Very good companies. Have no issue with this stock at all, and great addition to Microsoft. So very good. Not really worried about that. Let's go to our youngest. Our youngest uh, has a balance of $514.76. Money weighted rate of return year to date, 14.53%. Dividends earned, $2.51. Market gain, $42.91. Starbucks, still down on Starbucks, but we're making some ground here. Costco down over 2% with Costco. Sony, we talked about Sony, up over 30% for our youngest in Sony, up over 20% for Apple with our youngest, and then Tesla, up over almost 14% here. So all in all, very good portfolio. We're in the double digits with our youngest. With a portfolio like that, you can't really beat it, especially with how the market is right now. The market's very odd. It's very weird right now with the markets. Our oldest still has a balance of over $1,000, $1,039.04. Money weighted rate of return year to date, 6.92%. Dividends earned of $5.36. Market gain of $50.52. So very, 4 stocks: Apple, McDonald's, Costco, Tesla. I may ask our oldest if our oldest wants to add Microsoft similar to my wife's, just to give it a little bit of volatility, a little bit more volatility, even though we have Tesla in there. So we'll see. But Apple doing well, McDonald's doing well, Costco down almost 5% on Costco, but I am not worried about Costco. Costco is a stock that you could set and forget. Not financial advice, but Tesla up over almost 4%. And last but not least, let's go to my portfolio. My portfolio also has a balance of over $1,000, $1,064.55. Money rate of return of 14.53%. Dividends earned of $14.73. I like that a lot. I really do like the fact that we have $14.73 in dividends. $95.80 market gain. So technology, again, that's just Microsoft and Google for my technology pieces. 50% there, but everything else per the market is in a drawdown right now. So finance, you were looking at Visa and Moody's, if I'm not mistaken, we're down over almost 5.5%, 5.5% for them. Industrials and energy, which are waste management and Cintas, we're down over 3% year to date for them. And then real estate with O. Again, O, we are down a little bit, almost 1% with O Realty. But pharmaceutical, AbbVie is up, right? So AbbVie's up over 39%. And then even restaurants and food, which is a very big surprise, and that's Coca-Cola kind of man in the ship here, up over 5.5% year to date. So like when you have the monstrous gains from technology, the monstrous gains of pharmaceutical, and then you have a little bit of help from restaurants and food, it helps alleviate all the red you see here. Now, what we did do is in those orders that you saw before when we went through the portfolio, the portfolio buys, we did add some of that waste management. What I did was I selectively added um, my buys from my portfolio to specific stocks. So I didn't just tell M1 Finance they can go and do what they want with the money for my particular portfolio. I basically said, hey, this is what I want to buy based on it being in the red and based on where we were in terms of price. So that's what I did, and basically just bought the dip on those stocks. So with that being said, guys, we'll cut this video. It's week 84 of the family portfolio and dividends tracker. The balance for the family portfolio is $3,582.40. Money weighted rate of return of 13.44%. Dividends earned of $29.15. Market gain of $294.35. If this video was helpful, guys, please like, subscribe, comment, share it. Let me know what you think. Let me know what you like. Let me know what you don't like. It helps out the channel, helps us out. Um, and obviously, it shares it amongst like minded individuals like yourself that are trying to generate wealth. And with that, guys, thank you as always, and happy investing.